I'm going to show you an example of how the rich can get richer and how some of the lending guidelines can help someone get a better deal. I'm going to share my screen and show you about a condo in Florida. And here we go here. So this is a price of $625. It's in Destin, Florida. You can see it's on the water. It's going to have pretty good views. Here's the view from the balcony. You can see across the road. You do see the water. I'm going to skip right into the data. So when I show you some of the data, you'll see what I mean. So right here in this red, need rental income to qualify. Don't need rental income to qualify. So what I mean is that let's say you're going to go buy a condo to be able to rent out for Airbnb on the water, VRBO, et cetera, et cetera. And this is considered a condotel in our lending world because it's not going to be approvable by Fannie Freddie guidelines. And so these properties are really geared towards summer, spring season, renting them out. And so if you need the rental income to qualify, it has to go through a certain product that's going to allow you to do what's called a non-warrantable condo or condotel. And I'm using an interest rate of 8.375 on this scenario. It's just an example, not a rate quote, just on a previous example for another client. I'm using this price point to give you an example. And so if you put 25% down, rate is going to be 8.375. If you put 30% down, the rate's going to be a little bit lower. And so if I scroll over here, let's see if this is going to work. You've got principal and interest. The term is 30 years. Why is that doing that? Let's fix it. So principal and interest 3562. Air DNA actually shows an estimate of $67,000 for that unit. So from a monthly figure, 5583, taxes, insurance, HOA. There are obviously going to be costs to be able to run the property. If you do the math on this, there's 521 left over after rents and just your basic payment, not even including any type of management fees, etc. So if you don't need the rental income to qualify, meaning that you're in a better situation in terms of debt to income ratios, because when you need the rental income to qualify, it means that you need to be able to use the proposed rental income. Maybe it's a DSCR loan, maybe it's just the regular rental income to qualify in your ratios. On this scenario, it's assuming it's a second home and you don't need the rental income to qualify, and the rates are going to be better. So again, the rich getting richer, yeah, okay, but just if you're in a better situation of debt to income ratio and you don't need the income to qualify, you're going to be able to get better interest rates. And again, these are just examples to show you the differences. It can very well be much different on any given day. 7.125% with 25% down, 30% down, 6.75%. So the principal and interest payments are going to be lower, all things being equal. This is showing about $400 lower. And the money left over after expenses is also going to be higher. So it's one of these things that you have to be aware of if you're looking to purchase real estate, looking to be able to figure out what's the right way to structure the loan. Some of the questions to be asking on condos is, hey, is it warrantable by Fannie and Freddie? If it's in Florida and you're near the beach, it's probably not going to be an approvable condo. So you're going to have to use Condotel type of products. And then from there, do you need rental income to qualify? If you do, there's going to be a subset of products. If you don't need the rental income to qualify, there may be a different set of products. Again, guidelines, policies can change at any point in time. Investors come and go as they please, depending on market conditions. So if you have any questions, you can call me or text me on my cell phone. You can call my BAT line, 8339 BAT line. That's a number that we monitor, and you can also leave voicemails, or you can email me at jfarrell@firstintegrity.com. Back to the property though. Back to the property. Let's see here. Well done on the inside. All done on the inside. Here's the aerial view. Public beach, hardwood floors, got the bunks. It does sleep 6 based on what I was reviewing. Nice updated kitchen. Here's one of the bedrooms. So it's a nice property overall. So more condo tells to come.